Hi friends, this is Kishore. Welcome back to my channel. Today I'm going to share some of the housing stats and try to find the housing market trend. Mainly I'll focus on interest rate, home prices and income. Let's jump into the show. I'll start with the interest rates. Currently 30-year mortgage interest rate is 6.67 and 15-year mortgage interest rate is 6.03. And these mortgage interest rates are depending upon the 10-year treasury bond yield. If it 10-year treasury bond yield rises, interest rates also rises. If it falls, interest rates also falls. And these bond yields are depending upon the Fed fund rate. And these Fed fund rates are increasing right now. And in the last week, FOMC meeting, Jeremy Powell did not pass the interest rate, and they say they may going to increase one or two more times in this year, and then they'll think about the rate cuts. And this is the meeting probabilities. If you see, 71.9% chance of 25% basis points increase in the July. And this is inflation forecast. So the inflation forecast right now it is showing like it is just about 2% in the end of the 2024. And let's look into the income. The employment situation, this report came this week, and unemployment rate increased from 3.4 to 3.7%, and the number of jobs increased by 339,000, which is good, the number of jobs, but the unemployment rate increase is not good for the home housing market. And this is the wage growth tracker. So the wage growth tracker right now it is showing the wages are going down. This is also not good for the housing market. And this is a CPI trend. This is a 3-month annualized rate chart, which is very good. And if you see the red line, it's the rent. So the rents are going down, but CPI without except food and energy, the blue line is going flat. If it goes down, then CPI value goes down, which is good for the inflation. And let's look into the home prices. And this was housing market existing home sales report came this week, and it said 4.3 million homes are sold, and it is increase of 0.2% month on month and decrease by 20.4%. Inventory is up by 3 months, and the last month it is like just 2.6 months. And median sale price decreased 3.1%, like for 396,100. And this is the median price of existing home sales from 2019 to 2023. You can see the median home price is going up gradually. And this is the existing home sales median price percentage change year over year. And last 3 months, the median home price is coming down like -1%, -2.4, and -3.1%. And this is percentage change in sales from a year ago by price range. So if you see here, more than 1 million homes sales are down by 20 to 3% in year over year, and 750,000 to 1 million home price range sales are down by 21%. And this is number of home sales for sale drops to lowest level on record in May. So the inventory is going down crazily. So if you this chart shows from January 2012 to May 2023, and this is the lowest inventory in last decade, one decade. And this is pending sales are also dropped by 16% year over year. So the orange line is the 2023 one. And these are some of the key takeaways from the Redfin report. It says like last 4 weeks ended June 18, pending home sales fell by 16% from year earlier, and new listing of homes are also down by 24% year over year. That's what just now we saw it. And the price changes are differing vastly from city to city, like from Austin, Texas, Boise, Idaho, and Oakland, California, all saw double-digit year-over-year price declines in May, whereas in Hartford, Connecticut, Rochester, New York, Cincinnati, 10% up in last month. And lastly, I want to see some of the data metrics to find to figure out how the housing market is doing overall. And this is mortgage performance. The number of delinquencies are decreasing from last quarter 2022 of last quarter to first quarter of 2023. But foreclosures are increasing from 18,000 to the 19,000. And this is investors purchase. The number of investors purchasing homes are coming down from 91,000 to the 41,000. This is not good because investors are the one of the major market share buyers, like 18% in 2023 of the first quarter. So it's almost like one fifth of the market. And this is the report from NAR, like May 2023 Realtors report, which say like the buying traffic in next 3 months is 19%, but the same metric in April it is like 22%. It says the buyer traffic is going down. And this is bank lending standards. So right now the bank lending standards are tightening. If you see here, the green is tightened somewhat, the thick green is tightened considerably. So right now it is tightened considerably, and if you see from last 10 years, this is the highest lending tightening standards. And this is United States full year GDP growth. So the GDP growth is decreased for forecast is like 2023 third quarter and fourth quarter is decrease in the GDP growth. And this report came today from the Bloomberg. Growth in US business activity eases. Manufacturing gaze shows deeper contraction while services expand. So manufacturing index is going down. This is one of the major metric for the GDP growth forecast. And this is what are the major industries by sector contribution to the GDP. In 2022, finance, insurance, real estate, and rental leasing, this contributed 20.2%. Even in 2021, real estate contributed 22% of the GDP growth. So after looking at all these things, my conclusion is inflation is gradually coming down. That is good. Home prices are steady. Like their medium prices coming down gradually last 3 months. So right now I'm considering it is steady because it is less than 5%. And multifamily construction also increasing, which is good. And unemployment rate is increasing, so that is not good for the housing market. And also wages are going down and GDP lower forecast. These three are not good for the housing market. So right now I'm not expecting any housing market upside, but it may go somewhat sideways, and then we can see after a couple of months. Thank you so much for watching. Hope you like this video. If you like the video, please hit the like button. Please watch more videos in my channel, and if you like them, please subscribe and hit the bell icon. So thank you so much. Bye bye.